Good morning, everybody. This is Chrissy from Solstice ATR. I hope everybody's doing great, and I look forward to seeing you on Discord, on Twitter, Instagram. You can DM me either on Twitter or Discord. These are my two handles. More than happy to help. Remember, this is for illustration use only. We're not a broker dealer. Past performance doesn't indicate future results. You can ask for permission to take a copy of the material if you like. Before we get started, I want to say two things about this market. And what we're going to do is go back over the last couple of weeks that we had the market reset and where we are today compared to retail, banking, inflation, interest rates, bonds, materials, as well as technology and healthcare, to keep an open mind what the policies are domestically and globally, as well as the retail. Are people going back to work? Are people staying home? Is that check going to stop and people are forced back into their regular routine, going back to normal and after the vaccination? Some people take it, some don't. So we have to keep an open mind of what the overall market is doing in relationship to the charts. Historically, we see that we get resets, then we get continuation. Be open-minded to what the charts offer you. History, we don't trade. We trade what's given to us day by day, week by week on the charts. I do have the combination of the S&P, the Dow, and the Nasdaq. As we can see on the weekly chart, on every reset and consolidation, we get a breakout. Have we reached a peak? Are people concerned about inflation or not? So what I want to do is break it down a little bit into detail on a faster time frame. So what we can see since, the March, February 23rd through March 18, we had this reset. Then we continued higher. We had a consolidation here for a couple of about 2 months, and eventually we broke up. Then we tried to reset last week. We almost touched the week before the 18 simple moving average on the weekly chart. We get a hammer, then we go back up. Then we get a little bit of noise due to the pipeline hacking, and they closed, and there was shortage in oil. Then we have Iran, regarding the international security as well as nuclear. We have China, and between international, domestic, and we have cryptocurrency as well as Bitcoin. What we want to do is break it down into simplicity and keep it simple and open mind. So as we can see on the weekly chart, we have a hammer. I'm going to zoom in. You can see it. We got a doji here. Next week is going to be very critical if we go back higher to create a new high, or we fall back down and lose the 18 SMA in this channel that we broke out of on the weekly chart to continue lower. So I'm not saying to be bearish. I'm not saying to be bearish. Trade what's given to you until there's a change. Okay, now here we go. Let's first start by taking a look on breaking this down a little bit on a faster time frame. And what we're going to do, we're going to go to a 3-month chart. I don't want to make it too complicated, so we just keep an open mind on the shorter distance we have. Or we can do 6 months, that should be fine. And we go daily on the chart, and we can see those small resets. We had this major open cone. We reset to the 50 SMA, tested it twice, recovered, came back down, and recovered. But we get an inverted. We had an up move in the overnight. We came back to reset a little bit lower on Friday close. This is very important that we are in consolidation for a couple of weeks on the combination of those instruments. I know from March low, as well as January, February, and January low, we have not retested this area in January, or the February low on the combo, or the March low, or the March, reset before continuing higher. So we have to understand technicals before we make a change. We are in that range until we break out. We are in compression And this is why I have the daily chart on the combination. Let's go, first of all, by taking a look at the RTY, which is the small cap, or IWM, or IWF, which is the ETF fund. As we can see, we have been consolidating for quite a while, for almost since February before we got that breakout. We went higher, came back, retested it in March twice. Then we looked up, we fell back in, and we're trying to get out of this wedge. If this wedge cannot continue higher, we fall back inside the wedge to the downside, and we would lose the 116 simple moving average. What I want to do is zoom in to show you where we are. This is the monthly fib next month. By end of this week, which is the coming week on Friday, we have to change our Fibonacci's from the April to the May. This is the range for April, high and low. And we can see the weekly range, which was this here bar here Monday. And this is the low on that happened on, I believe, on 5/19, which was a Wednesday, and we reversed back up. We hit the 18 and the 50 SMA, and we rejected the 61.8. We are still inside that wedge. Either we break up or we fall back in inside that range halfway. And if we lose the 116, we'll look for the backside 2100, 2075. And if we break out, we'll look for the 2302, 2305. So that's the small cap. Let's take a look at now the Dow Joe Industrial Average, and we'll look at it as well on a similar situation. This was the annual high. This was the March low. This is the before we broke out in March. Then we continued higher. This is the range in April and May. Let's zoom in. We can see that the high and low for April, where the Fibonacci's are, we did the extension to 61. We rejected, fell back in the range. We have a middle range in here between these two channels. We retested the 50 SMA, and on Wednesday, since we bounced in Thursday, we did hold the 50. This is very critical, and we do hold the 38.2 here, which will act as support. If it doesn't, we fall through the channel. We go back to the other side of the 161. If we break out, we look for the 61.8 and above the annual high on the Dow Joe Industrial Average. And this is the weekly fib from high to low. We know the 61.8 is very important on the weekly to hold. Let's now take a look at the Nasdaq/NQ. Okay, as we can see in the Nasdaq, similar situation. We had the reset in March to February. Then in March, we continued higher. Then in April, we had an upper range distribution in the prior range. We looked below into the March range where we got the breakout. We got the support the week before. We pulled up. Wednesday, we came back in, and we're trying to push. We have the 50 and the 18. It's very important on the Nasdaq. This is very important. Usually when you get a crossing, let's say the 5 and 18 cross to the upside, that's bullish scenario. That's called a bull cross. If the 18 and the 50 cross, that becomes a bearish scenario, and they called it the golden cross. So we are in a critical area in the Nasdaq 100. We are still, since we broke this channel here, my concerns, do we clear the 61.8 to continue higher and get back above 61.50, 38 for the prior week range before the breakout and continue higher? Because I did not re-anchor my fibs on the Nasdaq. Let's do it together. Since we didn't have the weekly, we're going to go to a 4-hour chart. We'll do this together. Okay, that's a 30-day range. We're going to go get a Fibonacci. Since I did not do this, you guys can get to see it happening. This is the Wednesday low, and this is the Friday high. We are holding that down channel that we broke out of. Does this get to be supported, or the 61.8 to continue, or do we fall back in? We grab the fib from here, click it. We click the high, which was this week's high, and we go back a couple of days back because we have to go back to Sunday, edit property. So that way we can see the range for the week, and I'll go back to the 17th of the month. We can see where the range is in the Fibonacci's where we broke out of from Sunday, Monday. We looked up, we fell back in. This is very important area that we need to hold in order to continue higher in the Nasdaq 100. Let's go back to the charts, go to time frame. We're going to go back daily. We're going to go 6 months so we don't, cause any reaction in the charting. And I did not re-anchor this fib. In this one, we can come back, activate the property, and we'll move that weekly fib down to here so everybody can have a better reference where we are in relationship to the weekly fib high and low. Let's now go to the small cap RTY. I think we did the RTY. I think we missed the ES, which is the ES mini contract, which is the S&P 500. We can look at the SPY, which is an ETF fund similar to the Nasdaq NQ, which is the QQQ. The Dow is the DIA. So if you cannot trade the futures, you can trade the other instruments, which are the ETFs for your account. Let's take a look at the Dow, and we can see that the range is high and low. That's the S&P. We reset and came back higher. Wednesday, we retested the 50 and bounced back up. Keep an open mind on the range. If we get a breakup, or if we lose the 50, we'll look for the backside of the monthly fib, and eventually the 40.55 is very critical, as well as the 40.92. If we clear this area, we continue higher. If we fall back in the range, be open mind to change. Let's go right now to CL. We'll do gold. CL, you can look at actually USO. If you cannot trade the futures, you can trade the ETF for USO. This is a similar situation since the oil, hacking, the price of it spiked up, then eventually we fell back down. Still oil on the pump, especially like I live in California. Our pump is about $4.50 for super unleaded plus, which is the 91. We don't get 93. But if I want to go a little bit higher in like 93, 95, I will pay more on that pump average price in LA County, Orange County. So if I can see, we broke out of this linear regression channel to the downside in crude. We bounced off the monthly fib, which will have to reset in May. We have to do it end of the week. On Friday, when the market closes, we reset our monthly fibs, which is the high and low. We can see we rebounced quite clean on it, and we cleared the 38.2, which acts as support. If I do end up losing this area, then we look for the lower part in the 116 simple moving average, as well as the 61.8. If I clear here, I'll look for the backside of the upper channel and eventually the annual high for the year in crude oil. Let's take a look at GC. And GC here is very critical. We can look at GLD in gold. So in case you cannot trade the futures in GLD, you can trade the ETF, which is GLD. GLD is very critical. It's reaching a target for me, which is around the 1908, 1910. I think in that area, it should find a little bit of resistance. I know we're breaking out. GLD, they used to call it as a safe haven for inflation and protection of assets in case the dollar does change, or the currency or crypto, whatever's people trying to push. Remember the agenda in the global market. There's trade wars, there's currency manipulation, and people are shifting to a safe haven if things go south. As we can see, since that linear regression, this was coming from weeks way back. I'm going to show it on a GLD once we go out of here, instead of using the GC. What I want to do is show you the monthly where we are in relationship. This was the monthly, April high and low, and we eventually broke up. We retested it once. We have that linear regression channel we are holding. We are holding this upper linear regression channel and trying to break out. As you can see, since we broke out, we consolidated and baselined. Then eventually looked up on Wednesday, came back in. Thursday, we pushed higher, and we closed a little bit. We came back on Friday and pushed back up to close. That 1875, 72.75 is critical. We are holding the 1878. It is very important we do not lose the 1868 because it resets us back to the backside of this channel. And if we're going to continue, we'll look for the 08, 19, 10, 12 area. I'm very satisfied with it before we get another reset higher. I think there's going to be a little bit of more consolidation around the 1908, 1912. 1923 would be the 161 Fibonacci extension on the weekly chart. What I'm going to do, go for a 30-day to show you where we are in relationship to that range. Okay, we're going to push this fib here. I'm showing you this 161, because eventually if we lose the 72, 68 area, we reset to the 38, 50, 61. And if we go back higher, we reset to the 10, 12 area and the 22, 161 to the upside. We have been range bound in the last week price. We looked up, came back in, looked up, came back in, looked up, but we are still below the Wednesday range. If we get a break at above Wednesday, you look for the upside. If you get a breakdown to the bottom of this range of this week, you look for the 68 and 52 to hold. If it doesn't, then you look for the backside of the 1845 area, 1840. I hope this was helpful in GC. You can look at GBTC, which is the ETF fund for Bitcoin. And I'm going to go on the daily chart to show you where we are. I mean, that's the alerts going off because, it's telling me, hey, the pivot point is short-term down, mid-term down, long-term down. I don't want to influence anybody because we trade what we see on the charts. So be open mind to change. Okay, we're going to go 6 months, no more. We're going to go, okay, as we can see, this is the ETF fund for Bitcoin, which is traded the futures on the exchange. We know that there was a gap in this area. We retested this here, and we got a small little bounce back up. But we were not able to clear this gap. There's another gap up here. I don't have them marked on the ETF fund because we tried to trade the futures in the, in GBTC. We can see that the monthly fib was from here to here. We fell down. Next month, we're going to anchor the fibs, from the May high to whatever the May low is, and we can get the new fibs. As we can see on Friday, we looked up on Thursday, but we fell back inside the range of the Wednesday, and we are holding on the daily chart the 200 SMA. If this 200 SMA doesn't hold, we'll look for the backside of the prior consolidation and the breakout in BTC. If things do change and we do clear the Wednesday and Monday range in BTC, because you can have a mid channel here to keep you going back higher. And if we get a breakout, you look for the upside of the upper channel. If you cannot clear the midpoint of this channel going down, there's a channel here. You can just go get instead of a fib, you can just go get a line. And we'll put this here so everybody will see it. So you can center it around the 2 points, click it, and go down this way. And you can see that we have a mid-range. Come on. I don't want to touch them. That's the midpoint. If we break out of this midpoint, we look for the upside going to the other side. If we cannot clear it, we look for the backside of the channel because the 200 SMA might not be support. And if the 116 comes up and we go back up, the 116 would be a resistance line going back to the 50 Fibonacci. That's on GBTC. And if I use the /BTC, this is what I've been calling and screaming since April 19, April 22nd. Get out of GBTC. Protect your capital around the 63,000. No one wanted to listen. A lot of the crypto guys and a lot of the Bitcoin lovers, I'm not biased to either side. I don't want to offend anybody or say this is the way the world is heading towards a new electronically transactional business. All I am saying, trade what's given to you so you can protect. Number one, you have to protect your capital. Number two, don't stay wrong. Number three, trade what you see on the chart and let the winner run, cut the loser fast. If you don't do that, you get yourself caught inside of a position and holding and hoping that things will change for you. Okay? These are the gaps that we had before in the overnight. If I put them on 4 hours, you notice I have them there. These have been revisited. This one hasn't been totally revisited. I left those two up here, and you can see we reset a little bit. Then eventually we have another gap here on the daily chart. Let's just zoom in this area. And we do have another gap on the left from the professional gap around the 26.23 when we continued higher. But we retested, before I do that, let's do this. You can see here we retested this consolidation before on the annual high. We came almost close enough, and the 200 SMA acted as support, and we bounced back up. In order to continue, we have to hold the 200 SMA in this channel. If we do not hold this channel, don't be biased to the other side unless we can come back and clear on the 4-hour chart and the weekly this gap, and we continue above the 38, 50, 61, and eventually the upside of this channel without being biased to either side. That's BTC. Let's now go a little bit faster in electronically traded funds. We'll start with XLK. This is the tech sector for the Nasdaq 100. And you can see this is the reset on the monthly. Do we continue or not? If we look at the XLV, this is the healthcare sector. We can see that the healthcare sector had an annual high, and we reset on Friday. Keep an eye on that inverted hammer in case we get a reset. XLE. I'm just going to go through a couple of them so you guys are aware of it. And you can see that's the energy sector. XLU is it's the balanced account for the domestic international equity. You can see we are in a downtrend, but we are holding that baseline here at 64. Let's call it 64.30. If we end up losing this area in the 50 SMA, we'll look for the backside of the 116 and the 200, because this was the head and shoulder before we broke up. This is the line where we're going to get support to continue higher. And if we end up breaking to the upside, keep an open mind to the other end of the channel. Let's take a look at IEF. And you can see this is the bond sector. Interest rate short-term maturity between 7 and 10. Keep an eye on inflation. Or you can look at ZN, which is the bond 10-year notes, or the ZB is the 30. And we can look at the XL, I don't know if we did this one, the energy we did, XLF, the financial sector. You can see it's at a peak holding the channel in the 18 SMA. We had an annual high a week before, but we are still holding the 50 SMA. If we do not hold, the 18 SMA, we can come back on the monthly to around the 35, 40 area, okay? So let's now take a look at a couple of equities. And I will do one more ETF, which I didn't do the energy, I didn't do the copper, which is the HG, I believe. And I'm going back to it just to keep an open mind, because copper is part of the manufacturing, because it's used for computers, it's used for homing, it's used for construction, it's used for buildings. So copper, there's a little slow down. Like if you look at Home Depot, HD, is it still continuation? We have to keep an eye if the 50 SMA holds. If not, we can come back to where the consolidation was. You had that kind of head and shoulder. It didn't really create it, and we eventually got that breakout on that big volume spike here. If we do hold here, and we can go back to the 61.8 and this, minor gap, because we have this little tiny gap here to continue higher. And if we fall, you look for the backside of the consolidation of the prior highs on HD. I'm not saying to short HD, but I'm telling you to watch sectors and rotation. On short term, you can see it says down, midterm down, long term down by looking at the labels up here on my charts. We do have, it gives you a midpoint, a high target, low target every day of the range, average true range, which is around $7 on Home Depot. If I go right now, we can look at AAPL. We'll go fast in them. You can see AAPL consolidation. If it's going to fall, there's a lawsuit that happened on Friday. It dragged Apple in the 50 SMA, and the 18 ended up to be a little resistance. Let's take a look at Amazon. Amazon, because there's sector rotation, it's a little weak. You can see it in that consolidation. You can look at Google. Google trying to recover, still in that consolidation after the earning report, holding that range. Let's take a look at NFLX. It had a nice recovery a little bit. It bounced off after the earn because we had that big drop. It's trying to consolidate, trying to get out of this area unless it's broken down. Let's take a look at Tesla. Tesla still looks weak next to Ford, General Motor. You can see it got dragged back down. The 200 SMA is acting right now as resistance. In order for Tesla to continue, we need to clear the weekly high in order to get back to the top. I do have a lot of Fibonacci's, and we bounced right, and we're holding the 161 SMA on the monthly chart on Tesla. Let's take a look at Twin Resort. Oops. WYNN. We look at like one or two, like Citibank, Boeing. You can see it's in that consolidation. Keep an eye on it. If it's going to break out, we'll look for the 132 and eventually the 135, 137. If it falls, we'll look for the 120 and eventually the 117 area. Let's take a look at GS, Goldman Sachs. It's consolidating, holding the 18 SMA. If we look at Citi, you can see where Citi is as well. Or you can look at Bank of America. We look at BA, Boeing. It got a nice recovery on Friday, and you can see it cleared the 18. We are in that linear. This channel is no longer valid. I have to take it out. Remove drawing. We can make another channel for it, which is between this point and this point. If I connect these two here, we have to see it broke out. And if I connect this one here, Boeing has broken out. This channel is very important to hold in order to continue higher. And if I zoom in here, we can see where the monthly high and low of the fibs are. And if this is going to hold, we break this channel. We look for the 50 SMA, the 38, the 23, and the 61.8. If it falls back in, we'll look for the backside of the channel on Boeing. This is a nice setup. It did a nice job Wednesday, Thursday, Friday. Boeing, it had that little professional gap in it. If I look at Caterpillar, this is in the construction business. Keep an eye on it because, you know, they build roads, they do, you know, landscaping, they do, you know, this is something to keep an eye, or DE, you know, in the agriculture. They use it, you know, for that. Lockheed Martin, LMT, if there's tensions in the Middle East and stuff, does Lockheed Martin hold? Doesn't lose that channel, or do we get back to the 50 SMA on the monthly chart? So that's that. And let's go back one more time, looking at the ES. And what I want to do here is break down one thing for you. I'm going to go to style. I'm going to show you how things are on the monkey bars, or you can use the volume profile, because this is the weekly volume profile. We know the sentiment, the 50 SMA is here, but we know the sentiment on the week. Is that the daily? Oh, this is the day, 3-month daily. Okay, we're going to go, okay, this is my fault. We're going to go time frame, 10 days, 30 minutes. Okay. As we can see, the prior volume profile, the POCs were here. And some of the time spent are these green. The value area high are those. Usually we look if the sentiment is above or the sentiment is below. On the weekly chart, we know the 50 SMA is holding in the middle. If I combine all this profile together, we're right in the middle. It can either break up or break down on the daily. And what I can do is go to a time frame. I don't know if they allow me to do this. I can go daily. I don't know if they, no, they daily won't do it. Let's see if we can do, okay, 15 days instead of 30. We'll try to do kind of, oh, they don't let you. Okay. We'll zoom into 6.5 hours, 5. If we add another 60, that would be, okay. We'll use the 6 hour. Okay. It's about 6.5 hours. We can do 6.5. I hope we can. Okay, we'll do 7 hours so that way you guys can see it. In the consolidation, when we go up and down, this is the prior high. We fell back in the range, we went up. We fell back in the range, we went back up. The profile, if you look at the consolidation where most of the POCs were before, are up in this range. And the lower ones are here and the ones up here. If I combine all these, my profile, my 50 SMA, is under the time spent. So I think the sentiment should be up. But if we end up losing the 50 Fibonacci and we fall back down, then the sentiment becomes inverted to the other side. This is why I'm using the profile. We use the value area highs and lows to understand in relationship to where we are every day. I'll zoom in here and I kind of give you an idea how to look at it. This is the profile, value high, value low. This is the most contracts sold. This is some of the time spent over time, just the numbers are going there. And this is where we had two distributions. You can see one here, little gap, then eventually another one up here. So when you draw the fib from high to low, you can get the extensions of the 38, 23, 50, and 61 to the upside. Similar situation to the bottom. If things do change, we look for the extensions to the upside or the downside in that range. And you can see on the weekly, on today's chart, on the S&P 500, if I do a fib from here to here, my 50 is somewhere around here. It's close enough to the time spent, but unfortunately, it's a little bit to the downside. If I look at the NQ, you can see there's a difference in the time frame as well. The time spent is higher, so the sentiment is a little higher. So we have a mixed bag on the exchange until we get out of this area. Hope this was helpful. I would love to see you hit the thumbs up. If you like this video, you have more questions, you can DM me on Discord and we can go from there. What I want to do is go to one chart before I let you go. And this was from the week before I did. And what I did on it is showed you where the resets were. We didn't retest the 4100. We retested the 4060 area and we bounced back up. So remember, this was a prior from a couple of weeks. This was on April 30th, 2021. I gave like an idea where the 1983 and 2010 were in relationship, what the average could be to the downside or upside. We fell below the 4100. We got to 4050 and we got a nice reversal back up in the market. So enjoy your weekend. Take care and I'll see you on Monday.